Hello, everybody. I'm your boss, Joe Boss, and this is a little special episode. This is a preview for the week ahead. Because going here into the rest of Thursday, into Friday, I see risks of a pivot from the risk-on moves that we've recently got as we get more US macroeconomic data coming in here right now in the next 30 minutes. And then we also have BOJ also coming in. And then on Friday, we have a lot more US economic data coming out. And there's no reason to expect the US data to be any weaker. Remember, we saw these moves lower in the dollar because the rest of the G7 had their economic data come out. It was relatively good. It was okay. It was performing well. And there's this thing where if you get a series, we had all the Eurozone data come out at the beginning part of this week, and now we're getting US data towards the latter part of this week. So there's just a time difference. There's a lag between when we're informed on the US side of, at least on this euro-dollar equation. So now with that said, we're going to be getting initial jobless claims and advance GDP. It's kind of like the preliminary preview numbers of GDP. And if those numbers come in at or a little bit above forecast, we'll probably see some US dollar strength for the rest of today into the economic events for Friday, which I don't see why the US wouldn't do well going into tomorrow's, PCE data, because you have to put it in a frame. You have to put this whole picture into the frame of, does this change the Federal Reserve's expectations at all? Or the market's expectations of when we think they will be doing their first rate cut. Right now, the market expects September, right? If I pull up the DXY here, again, another set of expectations met. When I look at the range probabilities, we're at likely lows for the week. And now, what's qualitatively different from this low compared to this low is that this low over here, we were still getting lots of economic data from all these other countries. And the difference with this low over here is now we're getting the US data, which is going to be a lot more pertinent to whether or not this thing actually continues reversing from here. We find our likely low or not. I'm going to do a little something here. And I'm going to look at the seasonal low data for the DXY. Let's see here. Give it a sec. It takes a lot of data. Yeah, there you go. So on some bad US economic data, going past this S1.5 pivot, if I zoom in here, never in the last 44 years have we had a low between these two pivots for this particular week, the 17th week of the year. So I would view this as a probability gap based off of how I trade the probability pivots. And a probability gap is simply once you go past this pivot point into a zone with zero probability, logically you would think that you would move to the area with the next highest probability, which would probably be here or here, one of these two spots. So at a minimum, on bad US macro data, I would be expecting that sort of move, at least down to the low 105s. And then on particularly missed, surprise bad data, I would be expecting sub 105. Now, over the weekend, there is a bit of a problem with holding dollar shorts over the weekend. If the data comes in essentially nominal, flat, sideways, a little bit up, a little bit down. And that is over the weekend, understand as a preface that we are in a FOMC media blackout period. No one from the FOMC is allowed to give commentary right now on the market or where they think Fed policy should be or anything. So when we are in FOMC blackout periods, in fact, whenever we're in any central bank blackout period, very, very frequently you will hear rumors and leaks of commentary coming out of Bloomberg, out of Financial Times, out of Reuters, out of, the Nikkei with the BOJ. So I am very well aware, and I've run into enough of these articles in my time trading, that even though it's not something on the economic calendar, and it's not like a quote-unquote official thing that these leaks occur, or, very frequently they never occur, but from the time that they do occur, they set the tone for the meeting ahead over the weekend, and that can create a jump at the open of the following week. So I'm not expecting any sort of leak, any sort of press test to come out from the Fed over the weekend. But even in very benign situations, this has happened where essentially the market is expecting right now the Fed to stay higher for longer. And then we get some sort of article leak saying, oh, the Fed wants to stay higher for longer. They're going to have a more neutral, hawkish tone at this next meeting in the leak, in whatever article from whatever venue it comes out from. That's already the baseline expectation. And if you read the room and read the outlooks and look at the surveys of economic forecasts from all these economists from all the surveys that have just come out over the last week, everyone is expecting dollar to get stronger, the Fed to stay higher for longer, and for inflation to potentially ramp up into the summer. And I was actually ahead of that. When I was saying, way over here, hey, there's risks of all these manufacturing PMIs. The surveys are indicating that we could see manufacturing recover so much that goods inflation starts to come back in a more meaningful fashion once we get to June, July. And that'll totally price out expectations for, right now it's 50% probability that we get a cut in July from the Fed. But I think that'll probably go away if goods inflation comes back and services inflation is still sticky. And that's kind of like a global phenomenon happening right now, not just in the US, where manufacturing and PMIs are coming back online, and prices and costs for manufacturing related goods and businesses are starting to go on the up and up. What's interesting is that a lot of manufacturing companies are actually laying off a lot of employees. So they're increasing their costs and improving their margins by not hiring as many people. So you're seeing a more significant recovery in manufacturing going forward. With that in mind, that could create some inflationary pressures. And this is going to probably keep the Fed away, in my opinion, and other central banks away from, maybe outside of Europe, for example, maybe, of having more consistently neutral hawkish tones at a minimum. And yeah, with that in mind, we have FOMC over the next week. FOMC is due next week, and when that comes out, we already have very good and clear expectations, just consensus across markets and market participants of what to expect next week. And when it does occur, is it going to really be a surprise when the dollar goes higher next week? I'll go ahead and set the expectation now. Is it really going to be a surprise if going into next week, you see this going higher. Is it really a surprise? No, not really. Let's go ahead and look at our seasonal highs here for next week. Yeah, essentially back to these highs over here, make a slightly higher low, and then continue on higher for May. So something along these lines. And again, remember, these outlooks and these expectations that I'm drawing with these arrows are time-stamped. So if I draw a new set of expectations when I have new information, I can update my expectations. I can be wrong on these expectations just because I was right here and here. And on euro dollar, smack dab on the money here. Look, I was wrong here. Yield spreads were quite negative here. But the yield spread started to improve significantly towards the end of this week. And that's what actually got me long here at the beginning of this week. And so far, I've made a cool 94 pips off this. I gotta vent a little bit here because I've seen so many people who trade markets who are like, oh my god, dude, this thing's gonna go up and away. We're gonna go to 108 on the euro dollar. We're gonna go up to 175, 176. I'm like, yeah, maybe. Have you looked at your odds? Right? Like, there's a pretty good non-zero chance that that's probably the high here. And I look at like, what, do you think we're going to be hitting 107.5? Yeah, sure, we could do that, but the amount of time remaining left in the week before we start running into all this US economic data, I mean, literally, unless that US economic data comes in poor, comes in bad, we're not going past 107.5, and there's currently no reason to expect why that data would turn out bad. There's like, the whole world is on a path to economic recovery, and we're just trying to manage inflation while getting this recovery going. So it doesn't make sense to me why the US economic numbers would start to tumble and fall and get terrible compared to the rest of the G7, while the US is also at significantly higher cash rates than all these other central banks. It doesn't make sense. And that's kind of the missing bet I see is, people are setting expectations for super high valuations. And I'm like, well, what, are you thinking something fantastic is going to happen in the euro area over the first half of this week? And by the way, these were expectations that I was seeing on Monday and Tuesday, and particularly around here. Around this time in the middle of the week, particularly yesterday and the day before on the 22nd and the 23rd, I was seeing like anyone who had a dick and an opinion wanted to come out and say, oh man, we're going up and away from here. This is the start of it. And I'm like, why? Why do you think that? You can give me your technical analysis, sure, but why? What is your expectation of why we're going there? Because if your expectation is based off of just, oh, I think we're going to go up there because I think we're going to go up there, I don't want to listen to you, right? Here I was getting long this thing because I'm like, well, there's good chances of good PMI numbers coming out of Europe. So I'm going to, and also I'm seeing yield spreads improve. So I'm going to get long here. And yield spreads are a leading indicator of FX prices. They've been a known leading indicator for like the last 40 years. So I'm like, okay, I have good reasons here. I'm going to go ahead and take my shot. And I even added into this long trade here. Yeah, and guess what? I already planned ahead of time. I already looked at my calendar like 5 days ago, and I said, hey, by the time we get to Thursday, Friday, the risk reward to staying long doesn't make a whole lot of sense here. So I already planned all this stuff ahead of time. And even on Tuesday, I sent out a message in the trade group. I'm already looking at all the events for next week. I was already thinking about this weekend with potential leaks from, financial media on, what the FOMC thinks. Oh my God. Even though there's a big, broad consensus on what they think already. So I'm already focused on, hey, we're probably just going to get a net neutral, somewhat maybe hawkish FOMC next week. And if the US data comes out fine and comes out strong, it'll probably err them on the side of being a bit more hawkish on the neutral side. And that'll set the tone for the rest of May. And then the yield spreads will probably pick up and go in favor of the US dollar again for, however long in May until we run into a situation like this week again. There's a lot of people who would call this kind of like a breather. Like, oh man, we've fallen so hard, we must bounce. I'm like, no, we just had economic data for the Euro area and for all these other countries come out in the first half of the week. So they had an option to have their say in the economy. And now in the latter half of the week, we have US data. Now the US gets to have its say in the economy. And that can actually be quite a hard thing when you're just getting into trading to figure out, well, man, my expectation for the US dollar is for it to get stronger, but I'm seeing it getting weaker without understanding this differential of, hey, the US data we need to be long the US doesn't come out until the end of the week. And in the meantime, we got good data out of the rest of the G7. So until we get here, it doesn't make too much sense. And in the meantime, cool, 50 to 100 pips. Nice. Whatever. And I even traded this thing. If I had just listened to the yield spreads, I would have made like twice that. But I actually wasn't expecting the data to come out so poorly towards the end of the week over here. So what happened over here and what got me out early over here is potentially what could happen again over here, where US data comes out worse and sends this thing higher, probably into the upper 107s, just like over here when surprisingly into the end of the week we had the thing move in the last 24 hours significantly. We could have another situation where in the next 24 hours the thing moves significantly. But this wasn't expected by a whole lot of people. This was not the net expectation. I was expecting like a down, up, and then a down to this area over here around this time. And now we're down here, and I can continue with my expectation from the beginning of April that, okay, now we're going to recover until the latter half of April, and we'll have going into May some more bullish expectations on, the DXY. And FYI, in about 4 minutes here, we're going to be realizing some of this data. So I'll be able to see here if I'm right or wrong, right, on this expectation that I've set, which is essentially the consensus economic expectation. And I have no reason to expect otherwise. Maybe the data comes in a little bit stronger, maybe it comes in a little bit weaker. But when that GDP figure comes out, I'll have some extra information and I'll get to talk about it. And maybe I'll need to update my expectations, what I have currently told you and what I currently think about what's going to happen next. When new data is provided, you have to update what you think. Maybe I need to, instead of flipping from getting long over here to getting short, I need to get the hell out and flip real quick again because, oh my God, US GDP came out at 2% on the advanced number. This isn't looking good ahead. And, try and make another quick 40 60 pips. So in about 2.5-ish minutes here, we're going to be getting the numbers. I'm going to turn on Financial Juice, the Squawk chat here, which will read out the news to me. And real quick, I'm going to show you what I see on my screen. This is what we're looking at. This is coming out in the next 2 minutes. Jobless claims, advance GDP, and notice the red thunderbolts here. Market moving events. Alrighty. So guys, going into this, tell me your thoughts. Tell me what you think so far, the commentary. And thank you all for leaving likes and watching these videos. The last video did really, really well. Very happy to see the growth. Okay, I'm just watching these countdown timers. Also, we're getting core PCE, US retail inventories. Yeah, man. There's a lot of stuff coming out here. All right, Financial Juice is going to start talking in my ear any moment. And yeah, we're just going to sit on our hands here. I could go to an intraday time frame, and we can see how this thing looks on the daily ranges. You can also see another reason why I, wanted to get out here. Because that was also the high on the day, given the ranges.
1 minute remaining. I'll lead with the US GDP quarter-over-quarter advance.
Okay. 1 minute. And remember, the stream is lagged, so if you are trading this and you need the data as it's coming out, bring up your own calendar, like, right now. Comes out in, like, 40 seconds here for me. Okay. And I can turn on the music for now. Sorry if that was a little loud. But we can turn on the music for now. Not going to be saying much, but Financial Juice, they're going to be reading everything off. I'll pause the music when I want to talk. All right, US jobless claims came out lower. That's good for the US economy. Means,
1.6%, 1.6% lower than forecast, 2.5%. Initial jobless claims, 207k, lower than forecast, 215k. The continued jobless claims, 1.781 million, 1.781 million. That's lower than forecast, 1.814 million.
1.6%.
So seeing the GDP breakdown, price index 3.1%, 3.1% higher than forecast, 3%. US core PCE prices advanced at 3.7%, 3.7%. That's higher than forecast, 3.4%. Wholesale inventories, month-over-month advanced at minus 0.4%, minus 0.4%, which is lower than forecast, 0.3%. So looking to the markets here, noting a bit of weakness in the dollar and the S&P 500 following this release. Retail inventories ex-auto advanced at minus 0.1%, minus 0.1%. PCE prices advanced at 3.4%, 3.4%. GDP deflator seasonally adjusted advance 3.1%, 3.1%. Advanced goods trade balance at minus 91.8 billion, minus 91.8 billion, lower than forecast, minus 91 billion.
Holy smokes. That is not good for the Fed. Still going through some of the data here.
Treasury yields rise after the GDP number. 10-year yields last at 4.677%. So we have posted out the US GDP first quarter advance report on the feed for anybody interested.
Holy smokes. Well, that sucks for me. That is too tight of a stop. We'll leave that there. Yeah, sucks to see your expectation get met and then get zipped out of it by what? 3 pips? But with the GDP number coming in solo, I wouldn't be
Keeping an eye on the markets here, the S&P 500 is seeing some weakness, down 0.5% now. The dollar, according to the Dixie, is flat on the session now. Paired some of those losses.
Yeah, I would not be surprised to see the euro recover over the rest of this day, because that is not good for the Fed here. That is really, really, really not good. So while the employment side is turning out hunky-dory, the growth side is not. So I wouldn't be surprised to see 107 here hold. Let's go ahead and draw a little. Make that thing green, make that thing green. And set these at 107. Again, while the yields have got stronger here on this bar, I'm not totally sure why they would be getting so super strong here on weaker economic data for the United States, because the rest of Europe and, I mean, Aussie's higher. Let's see here, what else? New Zealand is still green on the day. Let's go ahead and check out the equities. Yeah, you can see we gapped down here on the ES. On the NQ, we also gapped down. So this is not good on the US side of things. And net, things are still positive for the day for a lot of these yield spreads. New Zealand, not so much. For the pound is holding in there price-wise, but definitely not yield-wise. It's not doing so hot. But yeah, would not be surprised to see 107 hold today, given that data. So real quick, let me go ahead and check out the live chat. Oh, man. I am kind of curious. So let's see if I can do a poll here. DXY direction higher or lower? So go ahead and tell me what you think now. And that was the likely low on the day. I mean, if I was trading DXY, I would have been smack dab right on the day. But no. Nope, nope, nope. Okay, we got any other data here to look at? US GDP price index rose a lot. US core PCE prices advanced also rose a lot. Wow, so PCE rose significantly. Maybe PCE has a more significant weight than the advanced quarter-over-quarter GDP figure. Maybe that's what I missed. Yeah, because that was actually quite a big surprise. The expectation was 3.4 for core PCE, and it came out 3.7. Yeah, man, everyone put PCE on the sidelines. They were just expecting it to come in as forecast. So yeah, maybe it's the surprise in the inflation on that PCE. Because that would make sense for it to actually move the yields and the yield spreads like this more negatively right off the rip. Yeah, just a tad too tight is all. Just a tad too tight. Yeah, check that out. Yeah, I'm probably not going to hold 107 now. So right now, 50-50 for DXY higher or lower. Yeah, it just tagged me. I missed it by 3 pips, which sucks. But you know what? That's just what happens sometimes. Would have been a nice, cool 20 pips right now, but we will see. We will see how this develops. Because right now, I think the yield spreads on this day should be red. Yeah, they are just red right now. They are not looking better, to say the least. It ain't so bad here on a 12-hour, but then again, that is very likely the high here. So I would be willing to say that the high for Eurodollar is in for the week. All right. Looks like the poll is split between 2 votes, higher and lower, on the DXY. Yeah, 50-50. So those core PCE numbers are definitely going to make the Fed more hawkish, which is why the yields continue to move more negatively and in favor of the US dollar here. However, the advanced GDP numbers are not good. That means high inflation, low growth, where the growth was expected to be about a full percentage point more. So I'd say it's a much larger miss on the GDP side of things than it is a beat on the US core PCE side of things. But obviously, more participants in the market are weighing the core PCE a lot more significantly than those GDP figures that came out. So, net from the first 30 minutes of the stream, expectations have not changed. I missed my trade by like 3 pips, but you know, sucks for me. Right on the expectation, missed by 3 pips. Sucks. Oh well. At least I have 94 plus pips of profit to look at over here. So I'll be looking at the next opportunity here on this chart and on a few other charts. New Zealand looks about the same. Australia looks about the same. How about the dollar yen? Dollar yen recovering. It's probably going to head up here by the end of the day. And I believe that's everything I wanted to cover. I just wanted to cover this one economic event, give my expectations, show some live trading, and then I'll see you guys tomorrow for the actual week ahead trade plans stream. Alrighty, you guys. I will see you all in a bit.